Eli5 Why are interest rates now considered worse than higher interest rates of decades ago? The fear was that people and companies had too much variable debt. Debt is good for growth when it's cheap low interest rates and bad for growth when it's expensive high interest rates. So if everyone had to start paying more towards their debt, it would take away from stimulating the economy and leading to some businesses to go bankrupt. This would continue until we were in a recession. The good news so far is that the economy hasn't broke yet, so we may see high interest rates for a long time. There's been a big run up in home prices over the past 3-4 years. That wasn't a huge deal when interest rates were at 3, but it makes monthly payments for homes at 8 a lot more expensive. Ordinarily, rising interest rates would put downward pressure on home prices, just due to supply and demand. But, the rise from 3 to 8 was sudden, and it created big disincentives to sell. If your mortgage is at 3, you don't want to move. And, so supply stays tight, keeping prices high. Interest rates are just one part of expenses. They're essentially saying even though you've been getting a pay cut for the past 40 years and we've been steadily increasing prices, and we are now making you pay for more things without any help, health insurance, retirement, etc., you should be grateful. If you're asking for boomer reasoning, I suspect they aren't adjusting for inflation and cost of living, because it was 15 of a much lower number. And not just like regular inflation number, average houses used to cost like 3 or 4 times what an average yearly wage was. Now an average house costs 20 times an average wage. The market went from low cost high interest to high cost low interest. But in the past couple of years we are trying out higher cost rising interest, and it is not great. Bear in mind salaries were a lot lower 40-50 years ago. In the 80s a 13 mortgage rate was the norm. I didn't even know a bank would allow you to buy a house without a 20 down payment. Don't you have to get a CMHC special insurance if you don't have a 20 down payment? Why do people think buying is always the right way? There are many valid reasons to support renting instead. An interest rate of 13 is worse than one of 7. Almost twice as bad. You understand that correctly. When people are saying it's not the same thing, they are talking about home prices being much, much higher than wages were years ago. So much higher that even a lower interest rate makes the home purchase more expensive than it used to be. My theory is that someone who is radical one way or another is going to see any view that's not as radical as theirs as the other side. There are many people on the right who think that anyone who advocates for basic health care is automatically a communist even if they themselves are on the right. Decades ago your parents are making $100,000, but houses only cost $100,000 with a 7 interest. Now, we are making $100,000, but houses cost $400,000 with 7 interest. Property prices went up dramatically, while salary never kept up. Interest rate increased based on the property price. Therefore it is worse now, because wage growth hasn't kept up with housing prices. In Australia, where I am, for example, in 1990, when interest rates were 17, the average mortgage repayment was 44.49 and the average monthly salary. As of March, at 3.35, the average mortgage repayment is 44.9 and the average income. Those boomers got a house at $50,000, which means the interest is $7,500. Where I'm from, interest rate is 5, but a house costs $700,000, which means $35,000 in interest. Also, the difference between salaries and house prices is much bigger now than back then, so we're getting double fucked. The interest rates are not worse than the rates of decades ago. The effects of the current rates on an average home buyer are worse than the rates of decades ago. This is because the value of a property relative to someone's average wealth is much, much higher than it was back then. The interest rate in 1981 was about 17. The median home price was $60,000. Inflation adjusted, that's equivalent to $227,000 today. Fast forward to 2023. The median home price today is $410,000. 17 on $60,000 v 7 on $410,000. Anyone with a pulse should see why they're not comparable. Already answered. Prices have gone 10x whilst your income has only gone up 5x. High prices mean bigger loans, so a 5 rate is in fact a 10 real rate if the loan you have to take is now doubled. And 20 real rate if your income is half of what it should be if inflation adjusted. Rates were abnormally low for a long time, so people got used to that. Now, rates are back to a normal range, But that normal range seems really high to some because rates were so low for so long. 7 Interest rates when home prices are 3x average annual salary, not a huge deal. 7 Interest rates when home prices are 15x average annual salary, huge financial burden on the buyer. The answer lies in the hyperbolic curve. Changes closer to the lower bound are going to be a lot more significant to valuations than changes at a higher point. I bought my first home for $155,600. January 5, 2007. I was making just over $16 an hour. My payment was $1,200, I believe. I just sold it last year for $400K. Interest rates haven't been this high in over 20 years. Pointing out that they used to be even higher is irrelevant, as it changes nothing, because wages have stagnated for over a decade. Mix that interest rates now and we're way worse than those greedy assholes were. Back in the 1870s, I just asked for some land and then built a house on it. Everybody since is just lazy. Saving accounts were also giving more than fractions of a percent back then. They ruined it all for us. I lose a finger. Bah, that's nothing, I've lost a finger too. He has 9 fingers left. I have 0.